Hello friends, today I am going to share with you why I sold off the QQQ and what I bought after that. So for those who are new here, my name is Vincent, and in this channel I talk a lot about financial independence, money, investments, and I share my journey and lessons along the way. And I also created a financial independence calculator, and you can download in the link below. So let's dive right back into the topic. So why I sold off QQQ? The first reason why I wanted to sell off QQQ is, first of all, QQQ is US domiciled. And being US domiciled means that they actually have a withholding tax for 30% on the dividends. So just imagine this. For every $10 of dividend, you only receive $7 because 30% is actually held by the withholding tax. And the last thing, which is the more important part, is estate tax. Because if you are intending to use your investment account for retirement, likelihood is very easy for you to exceed the 60,000 worth of assets. And any amount that is exceeding 60,000, what happens is that you will start to incur estate tax up to 40%. So can you imagine this? If your investment portfolio is $1 million and 40% out of the $1 million is 400,000. So if anything were to happen to you, this 40,000 itself, it will be a big trouble as the amount is so huge. So in order to avoid the estate tax, I decided to look for ETFs that are actually listed in Ireland. So let's take a look. For Irish domiciled ETF, what are the differences? The first thing is you would have noticed lesser withholding tax for dividends. So instead of 30%, it is 15%. And there's no estate tax. So for Singaporeans like me who invest in US assets, if I'm holding ETF, it makes sense to have Ireland domiciled ETF rather than American domiciled ETF. So this is something that I'll be looking at. So let's take a look. I'm going to look into the top 3 European ETF providers because I'm trying to find confidence in size. Meaning the bigger the AUM, the asset under management, the more confident I have in them. So taking a look at the top 3 European ETF providers, that will be iShares for BlackRock, Amundi, Xtrackers. So in terms of market shares itself is 41%, 12%, 10%. So they are actually the largest player right now in Europe for their listing of ETF. So taking a look on the next thing is, let's see, QQQ and QQQM. So for QQQ and QQQM, basically they are domiciled in United States. But however, if let's say if you want to find the cheapest ETF for QQQ, what happened is QQQ expense ratio is at 0.2, QQQM is actually at 0.15. So this will be slightly cheaper. So if you are comfortable to hold QQQ, it might be a better option to actually consider QQQM, which is the same thing, but you actually get to have enjoy a cheaper rate, which is 0.15% only. Then the next thing is for the Ireland domicile ETF. So the first contender itself will be CNDX. So CNDX is actually under iShares. And right now, if you take a look, this is actually the biggest out of all. All right, 16.7 billion. However, the only thing that I'm looking at right now is that the expense ratio is actually at 0.3%, which is in fact higher than what we are looking at in QQQ. So this is actually the bigger size, which in fact I would have the most confidence to go for it. But however, the thing that is putting me off is 0.3% expense ratio. So the next contender we are looking at is at 8.6 billion. So this itself is slightly smaller, actually smaller by almost half of it. But the expense ratio is the same at 0.3. So it doesn't make sense for me to consider between the Invesco and the iShares because both expense ratio is the same. So if that's the case, I would rather get the bigger one. The third player itself will be Xtracker. So Xtracker itself, right, the expense ratio is at 0.2%. The total AUM for the asset under management is much smaller. But however, even though I say small, it's still 1/billion, which is still considered a sizable amount. And what we are looking at is slightly cheaper expense ratio, but however, it's on a smaller size basis. Other than that itself, right, it's the same. Accumulating dividends is a full physical replication, withholding tax as 15%. And the last one itself, which is actually the cheapest out of all, which is 0.13%. This is under UBS. So for UBS itself, the holding and fund size is actually only at 10 million, which is considered very small for an ETF. So even though this is the cheapest, I don't feel confident going for an ETF which is at just a 10 million size. This is considered very, very small. And there is actually another contender by Almandi, which is the second biggest player for the European ETF. However, Almandi is slightly different because the domicile itself is not in Ireland, it's actually in Luxembourg. Luxembourg does not have any estate tax at all also. But for the withholding tax, instead of 15%, Luxembourg taxes at 30% also. And lastly is that the replication for Almandi isn't the same as physical full replication, meaning they don't really buy stocks to replicate QQQ, but instead they actually find a bank and do a swap using a collateral that they have to replicate the performance of QQQ. But this actually increases counterparty risk, meaning if the bank were to go bankrupt, then there will be some issues involved. So due to the higher expense ratio, but at the same time, it's not the full replication and a higher withholding tax, I decided not to add even Almandi into the selections over here. So out of all this, which am I choosing? My top choice actually is $1 billion club, which is actually XNAS. XNAS itself, right, it did hit at least $1 billion. So I would say that this is still sizable. So XNAS is actually my top choice. It's not the biggest fund size, but $1 billion shows me that at least it is of a decent size already. And the second thing is expense ratio is actually at 0.2%. And this is on par with QQQ. However, I will have 15% withholding tax, which is still cheaper than QQQ, and there is no estate tax. So this will actually give me a peace of mind. And lastly, the custodial service is actually State Street Custodial Services Limited. So this is actually a very big custodian, and they are the top 3 players in custody services. So I totally have the confidence to go with Xtracker XNAS to actually use it to replace my QQQ holdings. And the last thing to take note is actually on the trading time, because if you are investing in QQQ, the trading timing is still the same as the US timing. But if you are trading using the XNAS, these are actually listed on the LSE, which is the London Stock Exchange, and their trading timing is different. So let's take a look at this. The trading timing in terms of Singapore timing is actually 4 p.m. They have already started the market already. So 4 p.m. to 12:30 a.m. So this is the trading time for London Stock Exchange. But once you hit the daylight savings period itself, it will be 3 p.m. to 11:30 p.m. So in fact, before even the market start at 9:30 p.m., which is in Singapore timing, the London Stock Exchange, at the start of 4 p.m., you can already start trading XNAS. So just have to take note on the different trading time. So I hope that you have gotten value out from today's video. So if you're somebody who is affected by the withholding tax and the estate tax, will you be actually transferring your QQQ or SPY to other counters? I would love to hear your feedback and also to gather some ideas from you all. So look forward to chatting with you in the comment section below. And I'll see you in the next video soon.